Are you prepared to manage your investment on your own? Join us as we examine the current state of Tesla stock and hear from industry experts about their thoughts on when the right time to invest might be. Journey, the electric car giant Tesla, has been a hot topic in the stock market lately with its ups and downs. Many have been wondering if now is the right time to buy. Investing is all about timing, and the time may be now to make your move with the legendary EV manufacturer. A smart investment today can reap huge rewards in the future, and who knows, perhaps early retirement too. Before we continue, fasten your seatbelt and prepare for the journey of your financial life. Please hit the like and subscribe buttons. If you were to purchase Tesla shares right now, when would you do it? Industry analysts claim that despite Tesla's stock dips throughout 2022 and into January, investors have been piling on the company's shares. In fact, star investor Cathie Wood has been piling on Tesla shares for months. It even seems as though she is on a dip-buying binge, as her investment for ARK Invest has been buying Tesla shares whenever the stock hits a record low. Despite the fact that Tesla has had a difficult year, many analysts concur with Cathie Wood that the current dip in the stock price is a great opportunity for investors to buy despite Tesla trading at levels that may not always correspond with the company's fundamentals. While Mark Newton, the head of technical strategy at Strat Global, believes that Tesla is a sound company, he concedes that some investors have lost faith in the stock because of market volatility and other factors. Newton stated in a recent interview that buying opportunities will continue to present themselves. When Newton discussed in his early January CNBC appearance, when Tesla stock gets down near $100 by the end of the month, there will be some things that will line up that suggest the stock is trading a buy, and it could have a very sharp bounce for Newton. The opportunity will present itself the moment when Tesla announces its earnings. At the end of the first week of January, Tesla stock was trading at about $113 per share, but has gone up almost double in February. The following day, it dropped further, opening with a sharp 5.7% decline. Mark Newton, a managing director of Fundstrat and market technician, stated to Yahoo Finance Law that he thought, a few days after the aforementioned CNBC interview, that Tesla was officially oversold, hoping for a bottom of less than 100. The possibility of a bottom, following which the stock might rally throughout the spring, is indicated by several of my models just before Tesla reports earnings at the end of the month. Shares of the electric vehicle manufacturer have dropped 65% over the past year, but they have increased by 10 to 20% so far in 2023, according to Newton analysts. These analysts believe that several factors have contributed to this shocking fall. First among them is the risk of operational miscues. Despite these concerns, some in the street are beginning to warm up to Tesla stock in a similar manner to how Fundstrat's Newton, and we believe the Q4 setup is better than last year. Tesla has grown as the company has expanded as the newest company in a stable, and Elon Musk is focused on it. Second, worries about production problems and the rate of Tesla sales in China persisted in the face of unclear COVID-19 policies. Lastly, the competition in the US EV market has only gotten stronger this year, increasing the likelihood that Tesla's growth will stall in 2023 and beyond. The latest sell-off has been driven by real negative factors, according to a recent client note from Citi analyst McKeely. We don't expect T4 numbers to be sufficient to allay worries about China's competition for market share or other factors that weighed on confidence in December. So the timing and release of new or updated models in alongside the quarterly report, the Investor Day on March 1st, may offer much-needed clarity and a handhold on these issues. It may also, by itself, provide at least a temporary boost to consumer confidence outside of Tesla, which is also starting to shift. According to market analyst Jeff Windu, we believe that Tesla's upcoming product introductions will enable it to capitalize on this expanding market, which is why Edward Jones upgraded Tesla stock from a hold to a buy in the first week of January. I am aware of two investors who shared this opinion. We also believe that the current share price of Tesla does not fairly reflect the company's long-term growth possibilities. Because of concerns about the economy's potential to slow down and Elon Musk's time spent running Twitter, the price of Tesla's stock has fallen dramatically over the past year. While competition is growing and global regulations pertaining to emissions and mileage are driving the expansion of electric vehicles, we believe that the market for these vehicles will continue to grow due to global regulations. This may put pressure on auto sales in the near term, but we also expect Tesla to maintain a significant position in international markets as long as its management team is capable of carrying out the company's current operational plans. Analysts believe that Musk's decision to leave Twitter will be advantageous. In addition, Tesla is aiming to lower costs and increase manufacturing efficiency. The company is also focusing on software and subscription-based programs, such as fully autonomous driving, as a means of enhancing profitability. Dow expressed optimism that Tesla would be able to take advantage of this expanding market future releases of products in a note to clients. The analyst stated that while Tesla stock appears cheap given the company's potential for long-term development, he also stated that he expected Tesla's fully autonomous vehicle to launch later this year. The analyst believes that the Tesla stock price does not adequately reflect the company's long-term growth process in the market, partly due to changes in investor sentiment on Tesla's future, which is contingent on development in the electric vehicle market. Wendy acknowledges that this year's stock movement has been noteworthy, but he believes Tesla's beta program will keep getting better along with the company's EV batteries. This year's new products include the impending Cybertruck and the possible release of an improved Model 3 later on. For Tesla to succeed in the future, an accessible portion of the electric vehicle market must be maintained. Prosperity is the result of any commercial endeavor that is undertaken and that one may due to greater than usual swings in investor sentiment. Tesla's price varies more than usual in both directions. In a recent interview with CNBC, worldwide stock market analyst and Tesla shareholder Mark Newton stated that investors shouldn't expect our comeback anytime soon. According to Newton, in order for short-term investors to believe that a significant rally would begin, we must rise nearly above the level where it was broken. Despite Newton's claims, the stock began to decline in November and reached a low of about $206 per share. It has since rebounded to roughly those same levels and appears to be fairly stable in light of Tesla's terrible fourth quarter during which the stock fell 60% in less than 4 months and he increased the market capitalization to $700 billion. Newton cautioned that the electric vehicle manufacturer missed its earnings because investors simply cannot operate in such manner. Objective in the third quarter and failed to meet production and delivery goals. But Elon Musk, the CEO of Tesla, largely covered the client by selling his Tesla stock to finance the company's $44 billion acquisition of Twitter. Since coming public in 2010, venture has caused significant unease among Tesla investors, with some calling for him to leave the social network business due to his leadership style and political tweets and memes. The stock's fundamentals were weak because bearish calls were made public 2 months ago, and while analysts have noted that Musk's pledge to resign as Twitter CEO, once a replacement has been found, could be favorable to Tesla stock, Newton believes that the current sell-off is the company's worst. If 2022 showed us anything months ago, it's that Wall Street's worst mistake, buying dips on anything that's down 50%, isn't always a smart approach in a bear market. Even though there is still a short-term downside, Newton said that there could be a very sharp increase. But it was premature to consider that to end the month when Tesla reports his fourth quarter profits. He went on to say that a 10 drop in a stock price through January may leave room for a 30 to 50 recovery, and we're just seeing the beginning of it in February. If you like this video, make sure to hit the like and subscribe buttons. I'll see you on the next video.